No audio.
Still looks cool though.
It does look good. I mean, I could kind of.
I'd rather not stop.
I agree.
Because I hear the beat.
You know, it's kind of got a rocky vibe to the beat. Do you think?
It's got a little bit of that, yeah.
A little bit of that Eye of the Tiger thing. Yeah, I like it. All right, guys. Welcome out to our halftime report. I believe we should be live. I do see that icon up here in Zoom, and now we've got our screen up. We got Coach Matt, Coach Tim, and Coach Cody here today. Matt, we're back. We had a day off. We didn't plan on having the day off.
An unexpected
work. It was more work to take the day off than actually just come in here and do the halftime report. But
yeah, I was laughing about that. You know, we spent 30 minutes calling Zoom and trying to figure out what was going on. And, you know, then when it was obvious we weren't going to get on the halftime report because Zoom was down. And apparently it was AWS, Amazon. Apparently we're supposed to short Amazon today because AWS was the problem, according to Zoom. And, you know, they got it fixed within an hour. And, you know, in that time frame, I was like, I know the halftime crew's probably, you know, expecting something. So I was like, I got to record a video. And from recording of the video, the rendering, the posting, and all that jazz took me longer than would have been just to come here to the halftime report. So I just want to
wait a sec. Hold on. I got to get this down straight because I didn't know about this part of the Amazon thing.
Yeah.
So we didn't do our halftime report. So we blame Zoom and Zoom blames Amazon. Who's Amazon blaming?
Amazon can't blame anybody. They're the top dog.
Is he blaming the Democrats as well? I mean,
maybe Amazon's blaming the divorce with Jeff Bezos and him losing half the world.
Yeah.
Maybe Jeff was not on his 100% rocker yesterday when it was reported that he's going to lose out on $68 billion. And his wife, and I can't remember her name off the top of my head, but she will now most likely be the richest woman in the history of the United States. Interesting, fascinating, actually.
She bought low and sold high. I will tell you that. I mean, she
bought the dip, bro.
Yeah,
she bought it like literally. You know how there's so many stories of if you would have bought $1,000 worth of Amazon in 1998 and you would have sold it in 2018 for, you know, $2,000, you would have turned $1,000 into $1.8 million. This woman actually did it.
You know, I think about my own
98, bro.
It's possible that maybe she was the driving force behind Bezos actually becoming something successful. You never know what marriage.
Hey, listen, if you just want to look at our history, right? Yeah. Our father was an entrepreneur and whatnot, but it wasn't until our mother took over the business where those businesses really thrived. Our mother was the cutthroat business lady. She was
100%,
awesome.
100%. I mean, she was the entrepreneur and dad was the hardworking guy. Yeah. Good partnership for as long as that one lasted. That's a different discussion for another time.
It lasted a little longer than the Jeff Bezos one did.
It did. Welcome out halftime crew. As always, when we start the show, if you are brand new to Tackle Trading, click subscribe and always click that bell so that you know when we do go live. And if you are logged into Google or YouTube, that will then alert you when you're online. So you know, okay, come and join us real quick. I saw Earl's name in here right away. Earl, I'm glad that you can jump in right away. You know, I think we had helped him figure that part of that out. It's great to have everybody out here. Let's rock and roll. Cody and you and me, we were all talking politics before, but we're going to table politics and focus on the market. Federal Reserve Chairman Powell is speaking here in about 10 minutes, Matt. Yep. And the market has shown some interesting resiliency as we've started the year, quite frankly. We knew there was upside. And when it broke above 2,500, it was clear that it wanted to test 2,600, in my opinion. You had nailed that. You targeted that. We're now up here approaching this 2,600. What's interesting about the morning action, Matt, is that we opened up down 0.5%, you know, or so, and then boom, right back up the chart. Well, here we are.
Continue. Oh, I was just going to say, if you look at it from an intraday perspective, a lot of the going down coming into the cash open, Tim, that happened coming out of the Chinese markets and the international markets from last night. And you ended 3 days of trade talks between China and the U.S. and there wasn't any negative coming out of that. I didn't read anything too negative coming out of those meetings. In fact, I think a lot of it was positive in nature, but there was some lack of detail and substance, and that just gave, I think, the market a little bit of pause. I don't think there was any shorting or massive selling. I think the market was just maybe taking a little bit of profit, and that's to be expected after the massive move we've seen in the last 10 days in the marketplace. So I didn't take anything other than the fact that the market was a little overextended. It was obviously hitting a major resistance level right there at 2,600, and overnight, given the fact that we were lacking some details on the trade between China and the U.S., people were just locking in a little profit in the futures market. But once that cash open happened, and we've seen this recently, the cash open is right there, Tim. And what do you see? You see a breakout of that intraday reversal pattern, and now you're back up into that 2,900 to 2,600 range, and the market right now is just waiting for Powell. They're just waiting for Powell. That's what the market's doing. Everybody knows that the most important aspect of this market right now is what the Fed is doing, and it's obvious that the Fed has capitulated to the market. That is obvious to me at this point. But do they adjust their monetary policy? We don't know that, but they have capitulated to the market to a certain extent. Even in the Fed minutes from yesterday, they the one thing that really kind of stood out to me in the Fed minutes was their concern about slowing growth worldwide, and specifically regarding the Chinese situation. There was no real hesitation about the U.S. economy, and there was no hesitation about the shutdown at the government level is really just global growth and slowing down. And that's a concern for everybody in the market right now, Tim. I mean, just today, take a look at yet another company, Tim. At the very first year, what did I say in the prediction podcast was going to be the storyline this year?
Lowered guidance
and slowing growth. Mm-hmm. And what have we seen since that moment? We've seen Apple, we've seen Delta, we've seen Macy's, we've seen almost 10 different companies right now outside of the government, outside of the Fed, that talks about slowing growth. We've seen them actually lower guidance. And yet another company, Macy's today announces that their first quarter is going to be a little under what they expected. They lowered guidance, I believe, from 2.3 earnings per share to 2, and Macy's down 18%. And you might think, oh my goodness, why is Macy's down 18% when they just lowered guidance just a fraction? That doesn't make sense. But it's not about what they lowered it to. It's the fact that it's repeating that market concern, slowing growth. How is this going to impact U.S. companies? And in the first 2 weeks, I know the market's been really good, but in the first 2 weeks, slowing growth is a major concern.
What's interesting about that narrative, Matt, is that we saw it coming. We know it's going to happen. And that's what brings the whole conversation about earnings season into such focus. This rally that we have in the market is on really light news this week. We knew that starting the week when we did our full market prep here in the halftime report, there wasn't a lot going on in the calendar. It was Fed testimony and some other stuff going on. But we've saw lighter range candlesticks for the first time in weeks, since really the beginning of October. This is the lightest range volatility week we've seen. 1, 2, 3, 4 candles, Matt. You look at the R on those candlesticks, they are lower than what we've seen. Fed testimony today, but more importantly, earnings season next week. I think that whole conversation about guidance and earnings and actual EPS fundamental data is what's going to make this market break one way or the other. I'm currently still bearish. I said this the other day. At the end of the day, I do go with my account, slightly negative delta, but during the day, I'm trying to stay balanced. I'm pretty neutral right now in that regard on a day-by-day basis. I see the bear retracement. You can't ignore the pattern and the trend, but until we get confirmation, there's not really much confidence in that.
When you're looking at the market, Tim, it's easy to get, emotional about the marketplace, right? When you're looking at all these candles and you're looking at the price action and the daily movement in the price action, yes, it is very easy just to get emotional about it. But if you just take it and look at it like a technician, like our brother Mark would, or the great trader Jesse Livermore from many years ago, if you're just looking at it from an overall trend perspective, mm-hmm. and you see this type of environment here, right? If that's all you see, and then it starts to slow down at that level, what would you say? What would your bias be if that's all you saw?
It's bearish. That's why I
It's
still have
bearish.
bearish bias.
Right,
Yeah.
it's bearish. You don't have to make this complicated by getting into the emotional arguments of Twitter finance, right? You don't have to get emotional the same way that people that are watching CNBC or Reuters or Bloomberg or whatever it is does. You don't have to get caught up into the day to day of what's driving the market today, even though that's what we do in the halftime report every day. But if you just look at this purely from a price level perspective, you're looking at a bearish downtrend. When you focus on the weekly chart and you're looking at this from a weekly chart, that's a bearish downtrend. That's a retracement. Now, it is not confirmed, right? It is not confirmed, but at the same time, it's not difficult to say that we're still in a short-term bearish downtrend. Now, are you at a precipice in this trend that could change? Absolutely, 100%. I mean, look what's happening with crude, Tim. I said for 2 weeks, I'm waiting for it to hit 50. I'm waiting for it to hit 50. I'm waiting for it to hit 50. And if I would have got a slowing momentum and a downward movement in price, I would have shorted it at 50. But that's not what we got. And it went back up above 50. And now you got to be able to modify your projection. You have to be able to come off that downtrend and the emotion of that downtrend and say, well, now we don't have pivot lows and pivot highs in crude oil anymore. We have now a neutral formation happening. We have potential reversal formations happening in crude. And now I'm not really looking to short crude. Even if it goes back under 50, I'm not looking to short crude. In fact, I'm looking to do more naked puts here because the trend and the pattern is in fact changing here. But until that S&P 500 gets back up above 2,600, I'm still bearish. But if we do close above 2,600, will I go back into a neutral bias in the market? Absolutely, 100%. And it's not the futures market testing above or below, guys. Look at this on the ETF. If you close above 260 on the spiders, that's the same thing as a close above 2,600 on the actual index, the ES contract. If you look at it on the index, you can see that very clearly at 2,600. If you close above 2,600, I think you got to go back into some degree of neutrality. But until that happens, I'm going to be bearish. Now, does that mean I was shorting here and shorting here and short? No. After I got faked out right here, Tim, I'm patient. I'm a patient trader. Wait for it to set up. Wait for it to trigger on the downside. Wait till you get confirmation. And on the same thing on the S&P 500, it's not the test of the futures market underneath the low, Tim. For confirmation to actually happen, it's the close. The index, the ETF has to close underneath that level. It can't just be a test. So if we get some negative reaction, and Jerome Powell's literally going to start speaking right now, if we get some negative reaction to Jerome Powell's speech and we close underneath yesterday's low, that would be confirmation for me, and thus I would go look at potentially shorting stocks in the market today. But we still got a long way to go between now and then.
Yeah, for sure. Jerome Powell's testimony, is there anything that we're looking for here? I mean, obviously clues about interest rate policy and all that kind of stuff, but he's been giving these speeches for quite some time, talking about softening
more than any politician has.
Yeah. There's more risk down, in my opinion, from his testimony. I mean, he recently, the reaction to his recent testimonies has been, oh, they're more dovish, they're more dovish, they're more dovish. And so the market's almost kind of expecting that. I don't know what to expect, quite frankly, but I think they're potentially, if he says the wrong thing, that could spook the market down. Obviously, it could take it either way, but I'm not sure. I don't know.
There's more risk to the downside because we wouldn't expect the market to go up, 15% in one movement. That'd be quite the historical movement. So I do believe there is more risk to the downside here just because of the pattern, because we got slowing momentum. But if you close above 2,600, Tim, it doesn't matter. It doesn't matter. You have to be able to switch back to being neutral.
Correct. Back that out to a weekly chart, though. I'll say 2,600 is a very specific point. And really, there still is some 50-point range here that it all could be a pivot point, right? I mean, even at 2,620, I'm not going to call that confirmed breakout for me. Why 2,600 on the dot?
Because that's where I put it.
Right. Yeah. I mean, it's a zone. It could be a big zone in here without volume.
From right here in this movement here. I mean, you do got a lot of candles right there at 2620. And again, resistance are zones. They are. Typically, you want to look at a resistance level at about a 1 ATR zone. So if you're looking at that from a zone perspective, and the ATR currently is about, what is the ATR right now? About 70. yeah, you're talking about a 70-point zone, somewhere about 2630 to 2570. But I just think the market just cares so much about these significant whole numbers like 2600.
Sure. Psychologically, it's been that number in play for a long time, and definitely is testing it. It's been like a magnet
But
the last week.
just to go off your point, Tim, that point right there, 2625, that would be the next level.
Yeah. Well, in these resistance zones, especially on the intraday, this is where you get a lot of fake outs. When you go back and look at charts historically and you see, well, it had a little tail above there, it might go up there intraday and try to like put its head above the water, right? But then it comes back down in the middle of the day. You never know. It's testing it right now almost to the penny. It's pretty fascinating to watch. I'm still bearish, like we talked about with the S&P.
It's almost like, I've said the analogy before, right? It's like we grew up in an environment, Tim, where we had a lot of mountains and we had a lot of lakes and we had a lot of cliff doing stupid things in those mountains on those lakes, like cliff jumping, right?
Mm-hmm.
And there was this old lake in Emery County, Utah called Joe's Valley Reservoir. And it's a really, really, really popular kind of take your boat out, do some fishing, do some skiing, stuff like that, right? Yeah. And there's about a 40 to 45 foot cliff jump that when we were in high school, we would all go, right? And there'd be like 5 or 6 of us buddies all right there, and nobody would want to go first. So you would always egg on somebody to go first because you want to make sure they would survive the jump, right? Because you don't know what's under the water and you're jumping 45 feet and you're just being a dumb 17-year-old, right? So you would make sure that your buddy goes first to make sure that it was safe. Well, that's like the market when it tests its head above resistance or tests its head below support. The market is kind of testing that level to make sure it's safe. And then if you start to see price appreciation come off that test, that point, then that's a confirmation that it's okay to start buying above those levels again. But that's why you don't want to say that just because a wick goes above a certain level, that's confirmation. You want to see it close above that level to make sure it's safe.
Yeah. Top gainer on the S&P today is Constellation Brands, one of the ones that did lower guidance and dropped the other day, STZ, Matt. I do like this company. I do think it's a great company. And there's a reason why we do. I mean, we've been targeting this one for a while. Is this gap fill a potential buy on the equity here?
No.
Yeah.
No, we talked about it at length in the and I hope you guys, those of you who joined Tim and myself for the mastermind group for the Tackle 25 last night, we talked about that at length, Tim, in terms of making a decision to make an investment in a company as it's going down. And in technically speaking, you're still bearish here. So no, you want to wait for it to slow down. You want to wait for a double bottom. You want to wait for a double top. You want to wait for a breakout on top of that. And the example I gave last night was something that we've talked about in the halftime crew. You don't buy as it's going down, 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 down. You don't even buy on the first test. You buy as it breaks out and confirms going back up. And so when you're looking at Constellation Brands and you're saying, hey, this is a company I want to do covered calls on. It's a fundamentally good company. We know it's liquid enough to do covered calls on it. You still want to wait. You want to wait for the right time. And the right time is after a reversal.
I agree with that. Macy's lowering its guidance is affecting some of the retail stocks across the sector. I'm looking at some of the losers here, Matt. Kohl's, L Brands, Nordstrom, other big box retailers that have a lot of weakness. Even LB here dropping down on a little bit of a gap. That Macy's news is probably affecting the entire space.
Mm-hmm. LB's been shortable for the past year and a half.
Yep.
Yeah. Cody loves shorting.
Yes, LB. I do. That's my favorite short.
It's like for some reason it's like he likes shorting Victoria's Secret the same way I used to like shorting Chipotle.
Yep. AAL is also down. Airlines coming down here. American Airlines lowered guidance as well, I saw. And as a matter of fact, I saw some of the headlines from their report. Their full year 18 EPS guidance came down from the Q4 revenue. They went down to, up from 1.5 down to 3.3% or so. That chart right there, though, is not as ugly as you might have thought when I saw the headline. $30 is holding. It needs to break below it. One of the random things about earnings season, and this happens with companies, you don't always know when it's going to happen. About a week in front of the earnings report, they tend to come out and start giving guidance issuance if they want to get the investors changing their opinion on the stock. Mm-hmm. Back on the S&P here, looks like we're at 2592.
Powell just started his speech about 7 minutes ago, and market seems to enjoy his patience, I shall say.
They are all being
Thank you,
soft.
Adam, for the heads up on the, that's what he said. They have the ability to be patient. That's important. That's a signal to the market. And that signal to the market is we are more dovish than we indicated in December.
Mm-hmm.
It's a continuation of what we've heard for the last 2 weeks.
Yep. It's an interesting market condition. And as we strengthen here, Matt, you do run into the risk. Same thing with crude oil. I mean, think about crude oil. We'll get to that one here in just a minute. If that breaks 55, that's full on reversal. Just like gold after it came down to 1180, started going back up. Eventually, you got to call it bullish, right? We don't have that confirmation yet. But on the S&P here, as we're approaching 2,600, if it breaks out and runs, you have to change your posture. There's the old mindset, trade what you see. I mean, there's a reason why that's an old adage in the market, trade what you see.
Well, I just, you want to trade what you see, no doubt about that. But Tim, I guarantee that there's algorithms that are already programmed above 2,600.
Yeah.
So it's going to be interesting to see how the market does respond to Powell. Again, I have not read anything yet on that. I just heard what Adam said regarding their ability to be patient. But if that is the storyline, that's going to be positive. But obviously, I'll wait to review them myself.
Market internals are favoring the bulls here today. More volume on the bulls, and the advanced decline line is about 320 to 180 on the S&P. Let's move on to the Dow Jones Industrial. The YM, same old condition. Chart is almost identical between those two. They are moving in lockstep, equities all together. On the Dow, though, you're more split. You've got a 15 and 15 advanced decline line. Gainers here, Boeing, Caterpillar, Travelers, IBM, and Coca-Cola. Losers, Pfizer, Merck, Exxon, Microsoft, and Chevron. So it kind of looks like we're going sector by sector. Energy is down on Exxon and Chevron. Crude oil up and energy down is an interesting dynamic. What's your read on the Dow?
Same read. No different.
Yeah. Give me Boeing, if you would. That's up 2.4%. I have been neutral on Boeing, and we have Boeing on one of our Poor Boys Cover Call list, or is it the Dividend Fireworks? One of the two of those specialty lists. It's neutral here at 350, but man, that is looking a lot better than it had in a while. Once it broke above that 325, 330 range, it's now been off to the races here for a few days, Matt.
Yeah, back up above its 200-day moving average, slightly positive sign there. Not tradable. Is investable? Is that a word?
Yeah.
Investable, I mean, you're neutral on a company that you can write cover calls on, that pays a dividend. It's a fundamentally strong company, but it's not tradable in neutrality.
Mm-hmm. Give me Caterpillar, second biggest gainer on the day. Same thing, neutral. It's got some signs of a reversal developing down here, by the way. Pivot relationships are all over the board. You had a higher pivot, then a lower pivot. Now we're going back into a higher pivot high, more neutral. And you got earnings coming up.
I would not touch Caterpillar under 140.
Mm-hmm. Pfizer and Merck, two stocks that are down here today, PFE and MRK. It's always good to look at the leadership. Some of these big mega cap companies, they a lot of times will paint the picture of the market. Merck is failing at that pivot. It looked like it wanted to break. I did like the opportunity there. It's not a good candle.
It's not a great candle. It's neutral.
Yeah, it's kind of moving from bullish.
But this is a trade we have been seeing lately in the marketplace on some of these stocks that kind of held up versus what the market did. And the trade is either one, more conservative above its 52-week high right there at 80. But the trade that you're really kind of looking at is the break back above the left shoulder and the right shoulder. So you have a little bit of head and shoulders formation happening here, but there is a legit trade above 76.70 if you break back above those shoulders.
Mm-hmm. Yeah, I agree with that. Move on to the NASDAQ, if you would.
Whenever you see that pattern, that in one of our scouting reports, the first trigger is always above the shoulders. The second trigger is always above the head.
Mm-hmm. Let's move on to the NASDAQ tech stocks as well, kind of working through our indexes one step at a time like we always do. Work from a checklist, guys. There's a reason why we do top-down analysis every day. Give me a technical read here on the NASDAQ, Matt.
Got back above its pivot point, unlike the other indexes did. If you look at the kind of the trend line that's developing right there, you still got ranges to the upside on your trend line. The 50-day moving average is something you will contend with, but this is going to be dependent on the market, Tim. Even though the NASDAQ did get above 6,500, if the S&P fails at 2,600 and if the Dow Jones fails at 24,000, NASDAQ's going to come down too.
Yeah, and some of the biotechs are actually running. BioMarin is up, Regeneron is up, but the one that grabbed my attention in the top five was EA because of Activision and the gaming stocks. They're starting to make a little bit of a comeback here, Matt. EA was actually the third biggest gainer on the NASDAQ here today. GameStop is up today on bringing
That's
game
full on
makers with
reversal.
it. Yeah.
That's full on reversal on EA.
All the gaming stocks. I mean,
Yeah.
Activision, EA, Take-Two. I mean, they're all looking pretty strong right now, coming off the bottom.
Out of all those, though, I mean, you got Activision, that's full on reversal. You got EA full on reversal. Take-Two is TTWO. Take-Two is full on reversal. But if you had to pick up one of those from a trading perspective,
EA is the best chart.
I think you got to say EA. Now,
has the clearest air.
I want to pick up EA as it's overextended here. I'd wait for that next retracement to come back down. But if I'm looking at one of these gaming stocks to put on like a scout report, swing trade type, EA would be the one.
It's looking the best out of all of them right now, but that whole industry is starting to make a comeback. When it was bearish last quarter, we were dropping it down and we were playing it down. The one thing, if you're a halftime crew and you've been with us long enough, when the markets change and when the conditions change on anything, you have to change your opinion.
I talked about the Fed being flip-floppers and politicians being flip-floppers.
That's right.
Traders are the worst flip-floppers of all time.
We have to be.
We'll go from loving a company to hating a company on a dime. It's like an Allen Iverson crossover. It's that fast.
That's an old school thought. Best crossover ever?
Not debatable.
Timmy Hardaway, come on.
Tim Hardaway's was good. But dude, AI was
even
sick.
The Glove had a pretty incredible crossover. Remember what Gary Payton?
Gary Payton, yeah, he did.
Yeah, man, I love
John
point guard
Stockton play. Didn't have that great of a crossover.
No, he didn't have to. He just elbowed people. Yeah. He was so tough.
He was old school.
Utility stock here going up. I know this was one of the companies that you talked about last night in our mastermind group here, NRG. Matt, looks like a pretty good candle in confirmation here today.
Yeah, that's what we were talking about just barely, and I'm glad Justin brought it up from the halftime crew when we were talking about those tradable patterns where you have a potential head and shoulders formation, but the trade is back up above the shoulders. That's kind of what we're seeing here on NRG when you're looking at the left shoulder, the right shoulder, but you got this quick price appreciation coming back into it. You're looking at potential confirmation on top of those. So I just wanted to point out that's kind of the trade that you're looking for. Now, I don't swing trade a lot of utility stocks, but that is the trade you're looking for.
Tesla. We're talking stocks here in NASDAQ here a minute ago. I do want to talk Tesla. I saw that was interesting news from Tesla. I know we haven't talked about them as much recently. Kind of Elon put them on our back burner and they've been in the doghouse for a while. Matt, they are getting rid of their lowest price sedan. In a market and an economy where we have concerns about forward guidance and all this kind of stuff, and they're a debt-driven company, they're going back to their high-end model. I don't know if it's the right idea. Pricing strategy is very difficult, especially when you're dealing with $80,000 cars. But for years, wasn't the big idea that they were going to bring in a sedan at some point that people could afford?
Yeah, $40,000 car. It doesn't matter. Fanboys love Tesla. It doesn't matter the mistakes Elon makes. I just wanted to show you the support resistance zone for Tesla. That's what it is right there.
Ding, 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 ding. That's right. Buy it at 250, it sell it at 380 has been a good play over the last couple of years. Twitter was up again, Matt, 3.5%. Bank of America upgraded it, another tech company that you like and that you have talked about quite a bit. If it breaks out and runs here, you've got some clear air. Twitter's a complicated one because it's so sensitive and it does have some random news. Not exactly been holding the breakout.
33.
Yeah.
Now, are you a buyer above this level, though, G?
Of course.
That's the level you're a buyer above.
Yep.
It honestly, I mean, you're just range bound. I mean, if you really think about it, you take this 2-month little thing out of the equation and you're just kind of test the range bound between 250 and 380, the same way you're range bound here on Twitter between 26 and 37.
Mm-hmm. Yeah. Twitter. I would like a breakout there. I do like the company. From the social media platforms, I'm starting to enjoy them more and more, although I am using Instagram more lately. Obviously, especially when you got family and kids and your wife's posting pictures of your kids, Instagram's great, but Twitter is better for news and all that kind of stuff. They're improving ads. Yeah.
Just because it's Facebook. I just don't like Facebook at all.
I get it. I get it. Top losers, Lululemon is actually down 3%. United Continentals, Liberty Global, and AMD down 3%. Some of the chip makers are in the move. That AMD stock, though, 3% on AMD is not a big deal. I mean, they were moving 8, 9, 10% last month on day over day stuff. It's still just neutral in a range.
No, AMD's average range, T.
Yeah.
AMD's average range is $1.40. It's moving 64 cents today so far. So
last index is RTY. I want to take a peek at the small caps. Usually these are going to move when the international companies move or small companies move. They're more sensitive to that kind of thing. But really, we're just approaching old support. It's the same pattern in the market.
Mm-hmm.
Yeah.
You got it's a very, very clear level of support, though. Unlike where the S&P is kind of that 2,600 to 2,625, right there at really kind of 1460, I'm putting that resistance level to.
Mm-hmm.
Back up above 1460, you got to say 1,500.
Without much in the headlines, Matt, in the last 2 weeks, this thing has made 18%.
It's amazing.
Yeah.
It's amazing. It's been an impressive rally. There's no doubt about it. Obviously a little Fed driven, but that's, I mean, if you've been a market watcher for any amount of time in the history of the markets are Fed driven. So that's par for the course. But ever since the plunge protection team got called a week and a half ago, this market's just been buying.
Merry Christmas.
Yeah. Well, more happy New Year. Christmas.
Yeah, that's right. It was a late Merry Christmas. They gave it to that PPP. And maybe that is part of it. I mean, who knows what's driving these things up higher day over day over day over day. It's really, really interesting. Algos, whatever it is, you got to trade what you see. There's lots of opportunity.
Here's the problem for the bears, though. Even if you don't get back above these pivot points, Tim, for this trend to continue to the downside, you're talking about massive pain in a market where the Fed has indicated that if the market shows pain, they will come in and support even more. And thank you, Adam, for giving us kind of the highlights here. Here's some highlights from the speech so far from old Jay Powell. We are waiting and watching to see what happens. Okay, and I want to get your take on this, Tim. Next, we have the ability to be patient. Next, underlying data does not point to a slowdown. Next, I don't see anything that suggests possible recession in the near term. I mean, we're talking out of our ass, both sides, sides. I mean, both sides. I don't see a recession. I don't see any U.S. Slowing growth, but yet we're going to be data dependent and we're going to be patient and we're going to. I mean, we're just literally that is talking out both sides. And but what it does indicate to me, anyways, is that the Fed policy in 2019 isn't going to be economic related. It's going to be stock market related. And that's, I don't like that. I don't like that in any capacity. But at the end of the day, do you really see this trend continuing? I mean, honestly, in the short term.
Here's the big thing that's going to happen. And Christian said it earlier in the chat, get your popcorn ready for earnings season, Matt, because if they do miss on earnings, period, the market's going to bring them down. Okay. So many of these institutions based market valuation, whether or not they buy or sell on EPS projections and all that kind of stuff. And when it's like one of those emperors has no new close moments and they're like, holy cow, we were expecting $174 per share on ES. And now it's down to 168 because they all lower guidance. It will drop the market.
I still see a potential significant shorting opportunity here. Right. Yeah. But what I'm saying is that if you are looking at that shorting opportunities because of the strength of this movement here, and the Fed has been indicating that they will support market in any type of movement back down to the downside, what I'm suggesting is you got to be more conservative on your targets is what I'm suggesting.
Yeah, it might be short-lived and you're going to get volatility. What maybe the most interesting part of this little rally here in the last 4 days for me is just that you're not getting the wild swings intraday. We were getting amazing volatility. The ATRs exploded on the whole market, and now we're back to a more normal market. It goes back to what that hedge fund manager said when the PPT came in and what's the Treasury Secretary's name? Mnuchin. He's like, wait, guys, are we not operating in normal markets? People weren't as concerned before, and now the market is more back to more solvency in terms of normal.
Well, I'll tell you one thing that has stopped. People complaining about the algorithms as the market went back up.
Oh yeah, it's not algos on when it goes up, Matt. It's good, hardworking
It's
Americans.
buying fundamentally valued companies. That's
That's
hard.
right.
It's ma and pa buying these stocks on the dip. It has nothing to do with Citadel or Virtue or any of the algorithms.
Yeah, give me the dollars. Keep moving through our indexes here, and dollar index is the next one. Obviously, the Fed chairman speaking is going to affect the currency markets. I'm looking up and down the currency markets, Matt. A little bit of movement in the pound, the euro, dollar's going back up, third of a percent, about an ATR movement. The Swissy is down heavily. Aussie, New Zealand, nothing really. CAD, nothing really. Yen, nothing really either. It's really those European currencies and the Swiss franc that are moving down as the dollar's heading back up. What's your read technically?
Dollar hit support at 95, and it's now just going back up into resistance. And as it hits 96, that's a potential shorting opportunity.
Yeah, GDP out of Great Britain on Friday morning. So you do have some economic data, and then the CPI number tomorrow. Other than that, looks like we're clear sailing the rest of the week.
The big news was yesterday with the Bank of Canada, where they decided to keep interest rates at 1.75 versus I don't want to say the market expected 2.0, Tim, but there was talk in December of a rate hike in Canada. And I think the market did expect an interest rate hike coming into December and throughout the most of December to have the Bank of Canada raise to 2.00, a 0.25 basis point hike. But when that didn't happen, the Canadian dollar soared and the dollar went down. So par for the course. I said it when it broke 96, it's going to go to 95. Went to 95, snap back, rally back into 96.
That's
what the dollar does. It's quick in its movements.
No confirmation yet on this, but you are seeing a little red candle developing at the top of the intraday chart across ES.
Other statement out of Jay Powell. Thank you, Adam. Very worried about U.S. debt, and our banks are prepared for all outcomes of Brexit. Number one, that's not true. They don't know all the outcomes of Brexit, and they don't know how that's going to impact the European banks and liquidity and high margins throughout the U.S. either. So I don't believe that statement out of Jay Powell. Number two, I still believe the European banks have a lot of risk in them. And if the European banks have a lot of risk in them, U.S. banks share that risk as well. So that's number one. Number two, very worried about U.S. debt. I am as well extremely worried about U.S. debt and the deficits that we are running over the last 10 years and really kind of over the last 20 years. I mean, ever since really kind of the war on terror started, we've been a real deficit-driven economy. I'm worried about that as well. And I hope Adam says Fed's balance sheet will be substantially smaller. That is not a good thing for the market. The market should sell on that news. If that's true, market should sell. The reduction of the balance sheet is one of the biggest concerns for the market as it creates what some would consider a liquidity crisis or a liquidity problem. I disagree with that take. I hope the Fed does continue to reduce their balance sheet. I would be more happy with the Fed reducing their balance sheet than them raising interest rates. And I've been a proponent of raising interest rates. So in terms of that, I want to see the Fed reduce their balance sheet. I think that's as important as them normalizing interest rates. So that's a positive for me, but I don't think the market will see that as a positive.
Dollar strengthening on some of this news, but not a lot here going on. Let's move on to the commodity market, CL and then GC, like we always do in NG as well. Crude oil bumping its head up here, Matt. You know, it had a little bit better performance earlier in the day, but the big day was yesterday when it broke 50. From a technical perspective, that does change the narrative completely. You have to give that up to it. I was looking for a bearish retracement, setup, pivot. Let's all take a party to the downside. Did not happen. Broke 50. Now we're in no man's land from that perspective of the reversal, the way it develops. Give me a read on this technically, if you would.
Technically, I think you're back into neutrality. You're seeing the very early stages of a potential reversal pattern called a head and shoulders pattern, an inverted head and shoulders pattern. Those patterns usually take weeks to shake out. We've seen that across the board. Sometimes this just takes time, and that's okay. I still think it is shortable underneath 50, but you couldn't target anything besides, say, 47, 46.
Yeah. And by the way, these patterns, when they develop into reversals, they don't necessarily start just going right back up. It could still sell lower like you talked about, but then hit a different pivot, and that changes the entire trend narrative. It just makes it so it's less bearish than I was from before.
Markets are not as fast as people want them to behave sometimes, and too fast when people are in something sometimes. The market, if you're looking at this on Toll Brothers, and I keep coming back to this because this is the reversal. This is a reversal pattern. Tim, it took 2 months for that reversal pattern.
Mm-hmm.
When you're talking about a potential reversal pattern, Tim, you're talking about at a minimum, and I'm serious to this, on a M formation, W formation, you're talking about a minimum of 4 pivots. Okay, that's number one.
Mm-hmm.
On a head and shoulders formation or an inverted head and shoulders formation, you're talking about a minimum of about 5 different pivots. And if the minimum standard created pivot is 3 days, you're talking about a minimum standard in a perfect environment being over close to 3 trading weeks. 3 trading weeks. And that's a very, very fast moving reversal pattern. Typically, they take a little bit of time to shake out. So if crude is going to reverse, it's going to give us plenty of opportunities on the buy side as it does. It just will. Be patient. Don't chase it. Wait for it to reverse. If it breaks above 55, is that tradable? 100%, but we're at 52 on an overextended. Most likely scenarios, we see a little profit taking. Most likely scenario, we see a little consolidation, and then crude's going to pick a direction it wants to go. And in that time frame, let's be patient, wait for it to do it.
Markets are weakening intraday here, Matt. Give me an intraday read on the ES or the YM, any of the indexes. It's not a big move yet, but they did not like whatever just happened from a day trader perspective. When trends change like this, it is something probably going to end up moving it into a neutral range, but it is of note. If we ended up coming all the way back and testing some support zones, then there might be a conversation there. Just we'll keep looking at it as we can continue through the halftime report. Pretty big red candle there on the intraday, though.
Last 20 minutes, you're down about 1% in the market.
Yeah. It's of note, not a breakdown yet.
Give it some perspective. You're dojing at resistance, and if you doji at resistance, that's what bears want to see before they short.
Correct. Yeah. Crude oil is only down about 0.5%. Natural gas actually up 0.17%, trying to find some neutrality and trying to find a bottom, quite frankly.
You know what it's doing, Tim? It's trying to get back to normalcy. That's what's happening here. For the first time, you're getting back to some semblance of normalcy in natural gas to the point where we don't have to look out the window and say if it's hot or cold on the day. Obviously, we were just joking on that because we had no clue what caused this. I mean, craziness caused that. But every time I look at this, I just keep thinking back to that one hedge fund that was selling naked calls on natural gas, and they're probably looking at this going, why didn't we just roll it out?
Yeah, it's black swan risk. I mean, it is what it is.
Risk.
Yeah. In leverage and understanding probability. I mean, that idea that, it can't happen to me. Eventually it can, things like that. When you build systems that are sensitive.
If you over leverage yourself trying to get rich quick in a short time frame by selling naked calls, you deserve to lose your money.
Well, it could work for years, by the way. You can literally have a system like that working for years. You could feel like a rock star and then lose everything when you end up getting wiped out like this. I mean, that's an incredible move right there.
That's what happens when you deal with leverage. And I just want to reiterate one thing. Tackle traders know this very well. We don't do naked calls on anything.
Is this why the fractional banking system eventually will implode, Matt? Same conversation.
Do you really want to start this?
I do. We'll talk about it at the end.
Tim and I were debating for, and this is what we do, but Tim and I were debating for about 30 minutes regarding the fractional banking system and if they can continue to do what they've been doing by leveraging themselves for the dawn of time without causing massive panic. And my argument is very simple. No.
I agree. I get it. And it's not that you're wrong. I just find it's more of an intellectual and kind of debate, the future of our economy and where we're going.
You ask a question that you don't agree with just to see if you can spark intellectual conversation on it.
I like talking. Gold, silver, and the metals markets matter. Down a hair here. Dollar up, metals down makes sense. Copper's down 0.8%.
Listen, we said this on gold. It's going to high base. It's going to retrace. It's forming a high base. Wait for the break.
I'll tell you, a break at 1300 is tradable. If it did pull back, 1260 probably. I would also like that pullback.
I would still like it, but at this point, Tim, I've seen this too often times. A lot of times, once you start forming these bases, they just wait for this moving average to catch up to it. You kind of saw it here, T. Didn't form really a base, but you kind of saw it a little bit. Moving average catches up, starts running again. You're waiting for the break of 1300. That's an easy trigger. It's 16 on silver. It's 1300 on the break on gold.
I'm looking at the markets kind of, turning over a little bit, but still in the neutral range. Give it some perspective and some context. That's why.
If you want to look at the precious metal that's been outperforming everything, you should look at palladium.
Yeah.
Look at that. That trend has been very consistent. And I just want to put a shout out to a good friend of ours and a good friend of the Trade and Justice podcast, Pete Thomas. Okay. Because old Pete Thomas, that little son of a gun, he called this bottom.
Hey, Cody, invite Pete on the halftime report for an upcoming Wednesday guest. I would love, I mean, I'm sure Pete would.
I can't remember what the podcast was, but it's the last time Pete was on, or 2 times ago Pete was on. And he said, what I'm seeing in Palladium is very positive, and that's where I would go. And Palladium's done good. Platinum hasn't done very good, but Palladium. And the reason I brought up Palladium is this, Tim, right here. And I believe we had this breakout on the commodity report, bro.
Mm-hmm.
This breakout of 1200. Now it's overextended. Look at the slowing momentum here. Look for that to come back down into that breakout channel. And for those of you that don't know how to trade futures, what is there it is right there. Here is the Palladium ETF right there. So you can play that.
A lot of the metals are running, and definitely that Palladium breakout was a good signal. There's no doubt. And Pete's conversation, he's always fun to talk to. I just love hearing his stories.
When a 40-year-old vet of the Chicago Merc talks, we should shut up and listen.
I agree. I agree with that completely. You know, it's Theta Thursday, Matt. Last night we did our mastermind group on the Tackle 25. We talked about covered calls. I think we've already hit that topic quite a bit, but I just want you to talk a little bit about where we are right now from a market perspective heading into earnings season and how you can still capture some theta. One of the most important things we did yesterday as we were going through our Tackle 25 mastermind group is we made a delineation between those companies that have earnings coming up and those that don't. Because if you are a cash flow trader and you are, bowing at the altar of theta and you're going to just focus on theta strategies, you have to be very well aware of those earnings seasons and when those earnings dates are coming up, because they can affect whether you hedge, collar, all that kind of stuff.
Well, let's just pull up a heat map on earnings season, T, to get people a little prepared for this. We love our heat maps. We don't love FinViz and their ridiculous amount of pop-ups, though. Have you seen how many pop-ups they have these days? It's every 3 seconds.
Yeah, it's pretty bad.
Come on, you're getting greedy. Seriously. Yeah. Hold on. I am a elite member of FinViz.
I think what that means is the credit card probably didn't process for our payment.
I am an elite member of FinViz. I pay them $30 a month. Well, I don't tackle this. Thank you, Tackle. But point is, why am I getting pop-ups? It drives me nuts, FinViz, you greedy little suckers. All right, back to what I was supposed to be doing here. Earnings date. Okay, to read the heat map on an earnings date, color code it. Blue, more than 30. The greater, what is that? That's like a
less than 30 days. So
no, purple. Is that like a purple? Is that a magenta?
It's like a maroonish.
A maroonish.
Yeah.
Kind of like this jacket. Okay. All right. So here's maroon. That means we have more than 30 days, less than 30 days. So, like for example, these are all post earnings. The blue one's post earnings. The Costco's post earnings. Dollar General's post earnings. Right now, before earnings, the higher the pink is, the closer it is. So if high pinks, you're not doing covered calls on high pinks. Financials, those are all reporting next week. The ones that are more maroon colored, those are ones that you still have enough time to start looking at covered calls on.
Yeah, and not only the cover call, but just earnings in general, Matt, it is going to affect your strategy selection and what you do. You don't have to be a volatility trader to understand that earnings can make it go up and down. Put some time in the next week or so getting prepared for this earnings season, guys, because it will affect the way that you trade. That's trading 101.
And for the pro members over there that have access to the Tackle 25 Mastermind group, just go ahead and review that. We did about 90 minutes on the Tackle 25 last night. And if you want to fast forward through all the analysis of the Tackle 25, we did have a talk in the last 10, 15 minutes of that for the pro members, talking about, how to approach earnings specifically with covered calls, right? How, your one option, keep it covered going into earnings. That's a no-go. That's no fly zone. We never cover something and just leave it covered. That limited upside, unlimited downside. The next option is to leave it uncovered, right? And went through the decision-making process of why we would leave something uncovered Like for example, a stable company that doesn't gap a lot on earnings, we might leave it uncovered and then cover it after, right? Or the third option is to keep it covered, but at the put option to collar the trade. And we talked about the mindset difference in why we would collar something versus leaving something uncovered, and why we would never just leave something covered going into it. So just check out the mastermind group from last night. It was a great conversation with a bunch of the pro members.
Well, let me kind of quiz the audience here. How many of you guys did attend? Type in the words "did attend" if you were at the mastermind group last night, or even if you watched the recording yet. Let me know out there, Halftime Crew, if you did get a chance to attend that. I thoroughly enjoyed it.
Yeah, it was fun. It was way fun. But to answer Dustin's question, why they are typing in there, should you wait until after earnings to buy a stock and do a covered call? I would always wait to, if I'm not in something, Dustin, I would prefer to get into something where I don't have to deal with earnings. And if I have earnings coming up, I would much rather wait to see the earnings announcement and then make an assessment after the earnings announcement. So I would wait till after earnings. I wouldn't just buy a stock and collar the trade, because then you're only just protecting. If you're wanting to trade the earnings, then there's other ways to trade the earnings that are outside just protecting covered calls.
Mm-hmm. Yeah, I love that. As I'm looking at the market as we continue to work through the end of the day here, Matt, I got about 10 minutes left in the halftime report. Markets are weakening. Their intraday, it's not a huge move, not like we were seeing in October or December or anything like that. But we are seeing some turnover on the top of the market. A breakdown below that support would be significant to me, but really, I think maybe it's just going to end up as a
break. If you break 2560, that's shorting.
Sure.
Oh yeah. From what Adam posted and thank you so much, Adam, for giving us those headlines, because that helps me kind of look at how the market's responding to it. But based on what Adam kind of talked about, a little bit of a pro, a little bit of a negative, but that's not what the market wants to see. The market wants to hear dovish, dovish, dovish. So if he was hedging the dovish a little bit, and that's what it sounds like when he was talking about the concern with the debt and the concern with China and whatnot, then market's not gonna buy on that. Will they sell? We don't know, but I don't think the market will buy on that. Most likely, I think you're going to just see some range bound throughout the rest of the trading day, T. There's not a whole lot of catalyst outside.
It's at a pause point here. There's no doubt. I mean, you had the original sell-off, and now we're pausing. It's going to be an interesting day, pretty much a light day. Quite frankly, Matt, I'm going to hedge, get theta, go to the gym, and work on other projects. And I will have alerts. And here's the beauty of if you get really organized with your day. I'll have an alert on the S&P probably at 2560 that if it trips it, I'm going to get right back in front of it. Even as I'm up around, walking around, I've got my systems up and whatnot.
That alert at 2565.
Yeah.
You might want 3 seconds to prepare for that short trade under 2560, bro.
Well, I also, could put a contingency put on. There's a lot of things you can do.
There's a lot of things you can do. There's no doubt about that. Yeah. I personally like alerts. I like alerts, get alerted, and alerts come right to my phone, my email, everything. When alert gets triggered, I pull up the market. Usually I have the market on both my computers that I work from all day long. So I just let my alerts do the trick.
Yeah, and definitely mapping out risk. Little green candle coming in here, 15 minutes. I'm sure we're going to get back and forth as we go. Some companies I want to rapid fire through here, Matt. Option report, stock report, and we're always getting ready for the next one. But it's a reminder that the one from last week doesn't mean those are bad stocks. There still could be setting up here.
Listen, we put a good technical pattern on the report if we think it's going to trigger that week. Mm-hmm. It doesn't have to trigger Monday.
That's right.
To trigger Tuesday. We have to believe that it's going to trigger that week.
Mm-hmm. Take a look at DVN on a daily chart. Devon Energy, obviously the energy sector had been coming back up. We talked about needs. A little doji party or whatever it is you were going to call that is actually now setting up, Matt. Old support, new resistance, little green candle today.
What did we call that? Doji party?
Cody, you remember?
I think we called it a doji party.
It was doji party.
Yeah.
Okay. So I did get my first 2 days of the doji party, right? And so I got what I needed. I said it was going to confirm on Thursday. Ooh, so close to being perfect on that one, T.
You can get out of the country, but you can't get the country out of your talk. Not you personally. I just said the most Emory County thing I've ever said in my life. I said, Cody, you remember?
Hey, Cody, you remember that one time? Yeah.
A lot of words like that. Jeet yet? Jeet is a word.
Oh, man.
Tim just went all Utah. He went all Utah.
I did.
Utah is Some people call it lazy. We call it efficient. We just like to cut off words and put them and combine them together to make it more efficient. So Tim went complete Utah on you.
DVN setting up. I'm sure we're going to talk about that one tomorrow. CRM, one of my favorite companies to watch in general. I love this company.
Underneath the lows here, bro.
Yep.
So even though it didn't confirm today, as I predicted on Friday of last week, anything under this level right there, just give it a 25 to 25.10 barrier. That's that's triggerable. I would say 25. I'd say trigger under 25.
Yeah, I'm kind of seeing that same thing. Give me a look at Salesforce real quick. CRM. I'm going to be watching this company all year. I really believe in Mark Benioff as much as any CEO there is out there, quite frankly. I love what they're doing. I love his leadership, and I love the model of their business. I know it's a high PE ratio stock, Matt. There is all of that. There's a reason why it's on our Poor Boys Covered Call list, not just our Tackle 25 list. Inverted head and shoulders developing kind of, it's all reversal in general. Breakout at 150, Matt, is significant. If the market does want to show leadership and CRM breaks 150, I know that that's a run into a breakout. You don't like those technically, but you got to respect that signal, don't you think?
Absolutely got to respect that. That is a W on a weekly formation, bro.
Yeah, I love that company too.
I mean, that's a good signal there. Trigger's got to be above 150. No, I don't like deep runs into breakouts. I personally would not trade that above 150 because that just goes against my personal philosophy. But that's not a bad trigger. I mean, you trigger above 150. I mean, RSI still's got room to go up.
Couple of requests. Diane and Justin here, loyal halftime crew. Of course, we're going to look at a Monster and BBY. Best Buy was one of Cody's favorite short setups. Monster's now developing a little W breakout. Had the news the other day. Breakout at 50, Matt. We were looking for a breakdown below 48 as well. Didn't happen. Now it's running to the upside. More neutral.
That's rounding bottom, obviously coming off the 47.5, support level from back here in May. This to me is just untouchable. I would need to see further evidence on the buy side. I would be more likely to short this company than to buy this company at this point, but it's a stay away from me personally. Next, BBY. BBY to me, that's shortable.
I still like the short side of this for sure. Cody, is this a play that you've been making?
Yeah, so I moved my trigger just like we were talking about. What was it, Tuesday? We talked into moving triggers because this was one of my picks for the scouting report on Friday. And then Monday it had that big candle up, but that didn't make me – that actually made me like it more because it went into that 50-20 range. And now, today's the first day it triggered.
You can definitely call this trigger. It went underneath yesterday's low. There's no doubt. If you didn't short under yesterday's low, I think you got to wait till under 55. But
I agree with that.
That's just updating triggers. That's well done, Cody.
Yeah, it was a real good session. And we're talking about retracements and all that kind of stuff on Tuesday and Delta Tuesday. Best Buy's looking pretty good. Verizon's the same. Lorena, Verizon's the same conversation we were having on Merck. I believe one of them was Merck, and there was another one. CRM, you can make the same argument a little bit. It's your snapback head and shoulders rallies we've seen. It's above the left shoulder and the right shoulder. So if you're looking at that, you got to look at it above the shoulders on the left and the right. Yeah. It's going to be an interesting day to finish the day. I'm watching this intraday as well. It looks like we're flattening out, kind of neutral in that range. You're going to have some stock. It's going to be a stock picker's market the next couple of days, Matt, and the market will determine where we go. There's no question about it. A lot of bear retracement setups, but then you also have breakout setups as well.
No, there will be bullish breakout setups, no doubt.
And I love what Sam says. It's all about Twillo. I mean, everything. Listen, that was a beautiful setup and run here. TWLO, nice move from the reports and also the 25.
A break above 100 is tradable.
I like this company a lot. There's no doubt. 4 quick ones, Matt. AGIO from the stock report. Cody had it on here and take a peek at it. Bearish retracement update triggers. WWE on the stock report as well. The World Wrestling.
That's my favorite. That's the breakout that it had 3 days ago, pulled back now to where it broke out. That's my favorite setup right there.
I like WW here.
Yeah, looking good. DR Horton on the option report, DHI.
That's a reversal.
Little W breakout reversal. AGN last one, also on the option report.
That's shortable.
And guys, if you're watching those reports each and every week, that's great. I think it's one of the most valuable things that we do from a swing trading perspective, halftime report for your daily routine, top-down analysis perspective, and really stuff like that, covered call list, the Tackle 25 system, cash flow type systems from a position trading and portfolio design perspective. Matt, lot going on over there at Tackle Trading. Very, very excited about the release of that list. If somebody out there has not gone through the videos, I think it's probably a good goal for this weekend. Go through that course, make sure you get it done.
Yeah, that should be the goal. Get done with the Tackle 25 video system. Get your scouting report fixed on this Saturday. And Mark is doing the cash flow club for tonight. So he is continuing the conversation in the cash flow club tonight that we started yesterday on covered calls, earnings, collaring, all that jazz. So definitely go out there to the the cash flow club tonight and enjoy old Mark Stead over there.
And before you bounce out, give that thumbs up a quick click. And whenever we don't get at least 50% of our high head count, Matt, as a thumbs up, I feel a little bit.
We didn't do our job.
I feel like I didn't do my job.
Like we didn't do our job. We need to do better.
By the way, somebody was talking about the pipes bursting. And Cody, you had an analogy. Literally, my sprinkler backfill or whatever it is, it busted out today. I forgot to turn the water valve off. I got to go out and fix pipes today. That's not going to be fun.
Go have fun with that.
You got to go cut the water off. You're not going to worry about what spilled first.
Not good. Not good. All right. Great job, Matt. Great job, Cody. And we will see you guys tomorrow.